All right, fellow AMC stockholders, XMAX Trading here. I'm going to go over some TA that's been reported around other TA people on AMC. So let's get started. Subscribe to the channel if you haven't already. Hit the like button, leave a comment, and let's get started. Let's go. So I want to go over some important fundamentals. So Dr. Marco Metzler from Twitter, new reporting rules on derivatives in place since December 15th forced the hedgies to liquidate. The U.S. will prevent hedge funds from using complex derivatives to secretly build large stakes in publicly traded companies, the kind of trading that caused the collapse of Archegos Capital Management. These were not the only ones, just only ones who got caught over leveraging. Yeah, Archegos and probably other, maybe Anchorage Capital, because that's in the news now. There are more of these hedge funds that are doing this currently to get this leverage. New rules unveiled Wednesday, however, impose more disclosure and additional restrictions on firms that trade security-related derivatives. So, contracts of difference, swaps, all those positions worth at least $300 million, or the equivalent of 5% of the traded shares of an underlying, or equivalent of 5% of the traded shares of underlying stock would automatically trigger the new SEC requirements. And notional amounts as small as $150 million would also force reporting. According to SEC, investors will be required to disclose their identities, positions in swaps and underlying securities, and related borrowings. The rules would also cover large positions with bonds and credit default swaps. That's pretty good. I think that's, better late than never. It takes time for these rules to come in, through the SEC and other regulatory bodies, but better than nothing, right? Swaps account for 106 trillion of the 183 trillion total derivatives traded. It's swaps. I thought it'd be options or something else, but swaps, huh? Credit default swaps. It is a dark market that is heavily manipulated. The fact that there are firms like Archegos that can drop stocks by 75% a day pose significant risk to individual securities in the overall market. In a time where the system has never been so fragile, the margin debt has never been so high, derivatives have surged. The new rule is indeed a good step in the right direction in terms of reporting on stocks and being more transparent about potential short positions. However, I'm sure that we'll have a lot of surprises seeing hedge funds collapsing on this soon. New reporting rules, derivatives force. Well, we hope, right? We hope they force to liquidate, or people are very aware of what's going on. So, yeah. So, a lot of people are reporting, on TA as far as AMC. That's, if it were to surge, let's say, obviously it's past December 15th. JP Morgan reported there could be an end of the year short squeeze into January. So what would that look like? Let's say, theoretically you take a bars pattern from here to here. Kind of similar, to over here to here. I wonder if we could do that. I wonder if we can line it up somewhat. Yeah, it's kind of close. So maybe the top. I think it seems to retest, this ever-increasing resistance line here, support. And here's resistance up here. So maybe a blow off top of, 260. Not financial advice, just my opinion. Maybe 260, maybe topping 300, because I think last time, if we did this parallel, it kind of breached up here. If we go back, this is Haneke Ashi. A lot of people like those. If we did candles, yeah, it kind of breached the top there. So that might be, a potential scenario. It seems kind of similar. Oops, shoot. Gets all distorted. Put the logarithm back on. Whatever, you guys get the idea. So, so I think this might be a definite possibility. Are we seeing any gaps? on the 4-hour. Okay, indicators. What do we want to use here? Actually, we want to use a log of the MACD. Yeah, I mean that's ultra bearish right there, and there's a limit to the bearishness. You know, there's just a limit to the bearishness. What else can we do? So yeah, Spider-Man came out huge numbers, right? I mean, was it close to 250 million worldwide and probably 170 million in the US or more. Matrix 4 is coming out. Morbius is coming out. All these Marvel movies coming out. Top Gun 2 next year. So the market doesn't always trade on pure fundamentals, right? So if there's bad news that comes out, it gets over exaggerated. If good news comes out, it gets over exaggerated. So I think the market is looking ahead 6 months, right? And I think shorts are going to see that, you know, AMC's #1 movie theater is coming out with all these revenue, you know, building products, movies, popcorn, you know, maybe some GameStop, maybe some NFTs for these movies. I would not want to be short on this sucker. Let's go to the daily. Yeah, there's just a limit on the bearishness. A lot of times what I like to do is I like to make it less sensitive. So 52, double this. I think it's a little bit of a reversal going on here. The other thing too is like, let's go to the weekly. See, if you go on the weeklies, logarithmic MACD, it's still in bullish territory. It's not down here in the dumps. And then this is like almost a year ago now. This is momentary bearishness, but it's not below the line. This is the weeklies. So we're looking at weeklies. This is logarithmic. Yeah, log. Logarithm of the MACD. You know, this is not. So take this off. In my view, oh shoot. Can I just get a line? Trend line, I guess. See, in my view, this is a flag formation on the weeklies. You know, see that looks to me like a not a pennant but a flag, right there. This sucker on the weeklies, logarithm MACD, dude. I mean, this could break up, right? And I think it's the base of the flag. So this was 10 to 70, 80, I don't know, 70. About 200, maybe a little more than 200, depending where it breaks out. You know, so yeah, I think we're looking. I think this is the way to go. This is more. Let's see. I mean, you look at the fibs. Fib's a little tricky because it depends on where you put them. You can put them anywhere you want. So if it was this swing low to that swing high, this is bullish, right? Hit the 0.5. You know, it's gonna. Got at the 0.5, you know, right there. It's gonna bounce up, I think. Indicators. Let's look at RSI. What's what the RSI is gonna tell us? Well, we need a log of the RSI. Logarithmic. I guess I don't have the log of the. RSI. Make sure that this is fib based on log. Okay. RSI. Yeah, oversold. Boom. So overbought, oversold, overbought. Now I wonder if we can make this RSI stochastic length. So it's in the. So it's bearish, but it's gaining ground, right? Because you can do support and resistance on indicators, right? So here, and then also it failed here, so it went down more. So that kind of makes sense. So there's so much you can do with support lines, you know, and indicators, and what to do when, and logarithmic charts. I mean, it's kind of crazy, to be honest. That's why you get conflicting signals. Let's go down here. Let's look at the very bottom. It's obviously going to rebound here, and then it could go back up. See, I think it's one big flag, in my view. Let's take the log off. Very interesting. Very interesting. Also, they're talking about the futures rollover. So December the 15th was that quadruple witching hour, right? You know, the options expire. So I think that we will see some action next week, maybe the beginning week of January. I hope so. You know, let's get this sucker going. That's what I'm saying. All right, guys. Till next time. Later.